first and foremost, thank you, Shweta, for a wonderful introduction and the energy that you have obviously created in the room. A very good morning, or rather afternoon, to the audience. Thank you very much, gentlemen, for joining me on this session. And as you probably are aware about the format, we will open the floor after 40 minutes for a 5-minute Q&A. So we must keep to our strict timing. Must I begin? Obviously, EB-5 has been in the news since its inception in 1990. It has created marvelous milestones. We are now in 2026. There have been obviously certain legislations or certain, currents and other aspects, specifically also with the Reform and Integrity Act. And I would like to address this question to Girish, who beautifully opened this morning's panel and the conference, the conclave. Can you walk us through briefly about the EB-5 process and how it has developed, right from whether it's investment or to conditional and permanent green card within the framework of RIA?
Right. Thank you so much, Neity. So EB-5 basically has been in place since 1990. And the Regional Center program has been in place since 1992. So until 2022, it was a pilot program. So it used to be passed as part of an omnibus bill. It used to be extended time and again. The investment amount used to be $500,000 US. Then it grew to $900,000 US. In 2022, the rules were clearly set as part of the law, which is Reforms and Integrity Act of 2022, which brought the new investment amount to $800,000 US, which is the minimum investment amount if the project falls under a certain category, which is the targeted employment area category, or $1,050,000 US if it falls outside of that. So regional centers mostly function in the lower investment amount of $800,000 US. Now EB-5 predominantly it allows the main applicant, spouse, and unmarried children below 21 years of age to qualify for EB-5 visa or permanent residency for the US. Which we call as green card for the US. So the main criteria from an EB-5 standpoint is job creation. So each investment of $800,000 US needs to create 10 full-time jobs in the US, and economic development in the US as well. So that differentiates with all the other countries, which you must have heard, that you need to invest into a certain real estate property, and that is how you get the citizenship or residency. So one key differentiating factor is, from US standpoint, this is a job creation program. So those 10 full-time jobs need to be created, and that is something which Regional Center takes responsibility of. So if you invest $800,000 US with a Regional Center, that will qualify your family for a permanent residency, wherein the investment goes into a qualified business. Now, this qualifying business essentially can be a construction-based business. It can be construction of an industrial logistics facility. It can be construction of a hospitality project. So whatever the underlying asset is, the main objective is to ensure that the job creation happens and your investment is used in for construction for getting the job credits. And that is how you make application to USCIS with the help of your attorney. So the basic application which goes into USCIS is the I-526E petition. That is the very first petition which goes in as part of your application. USCIS adjudicates that particular application. They will look at your source of funds documentation. They will look at the project-based applications as well. And that is when they will approve your case. And that is when you start your conditional residency, which happens for 2 years. Then you file for I-829 petition. That is when you're asking the government to remove the conditions for your investment, and you get your permanent residency in the US. So that's more or less, that's the process for EB-5 investment visa.
Fantastic, Girish. Now let me divert to Rishabh as a parallel CMB as well. Can you tell me something more about the investor friendliness, and how does the current investor have any misconceptions? How would you allay the misconceptions that are surrounding the EB-5 program today?
Thank you for that question. So I think I'd like to start that, with the Reform and Integrity Act, there has definitely been stronger governance in the program. It's much more stricter compliance for regional centers, all of us sitting here. But, EB-5 still remains a medium to long-term planning. So, I would urge investors to not look at EB-5 as, a guaranteed green card or, guaranteed need capital back. I think that is the biggest misconception that, a lot of investors that come to us, that you still have to do your due diligence, ensure that, these job creations are real, and, you are understanding where you are sitting in this capital stack, what position you are, what is the downside protection, and is the regional center that you're working with purely focused on fundraising, or, are they also fulfilling their compliance obligations?
Fantastic. That's a very valid point about fundraising and the compliance. And I think, Rohit, I would like to direct this question to you. Source of funds. It's always been a problematic area. And obviously, no investor would like to have something that is delayed or denied from a concept that is meant for job creation for the common good. What's your take on that from a legal perspective?
Thanks for the question. It's, first of all, just good afternoon to everybody. Great to be here with you all. So source of funds is the single most important factor in EB-5. You have to be able to document where the money came from that you're investing. It's not enough to say it's from a bank. It has to be traced back to where did that money come from into the bank. And then you also have what's called the path of funds, which is how is the money moving from where it is after you've figured out what the source is to the regional centers. So you have to deal with the source of funds and the path of funds, both complicated issues, both issues that must be dealt with very carefully, or else, like Neity said, you're going to end up with a denial or probably greater questioning from the immigration.
Mm-hmm. And building up upon this, what financial and moreover legal due diligence should investors conduct on both the project and the regional center? It has to work in synergy both ways. So I'd like your take on that as well.
Sure. Due diligence with the regional center, like Rishabh just said and like Girish referred to earlier, you do need to, and you absolutely owe that to yourself, because as I always like to say, it's your money, it's your investment, it's your green card, it's your risk. The regional center and the attorney are there to help you navigate the process. They do not substitute for your own due diligence. As an example, if you're investing in a project, it would be perfect to go see the project if it's possible. Go and see if it exists. You certainly should meet the executive or the principals of the regional center so that you get an understanding from them as to how they feel about it, and there will always be your own gut which tells you this is good, bad, or ugly. That's for sure. So you do need to do that due diligence from the regional center perspective. Again, like Girish said, your single most important criteria for getting the green card is, are the jobs created or will they be created? That's super important. Then, of course, from the funding perspective, you're looking to see, you're working with your immigration attorney, who is not technically supposed to tell you where to invest your money. That's a licensing issue between the SEC and the investment advisors. That's something that's also important for you to check, in my opinion. And you've got to be able to document very carefully where the source of monies is coming from.
Absolutely. Very well said, Rohit. Now, before I move the spotlight on to Sebastian, I would like you, Rohit, to elaborate a bit more in your legal practice about certain red flags that might have been raised all these years.
Oh, there are plenty of red flags that one needs to look at. Again, you're delving at least somewhat into the track record of the regional center, of the players of the regional center, and those are not too difficult to find out. Certainly something you want to be able to do. If anybody gives you a guarantee, again, I just want to repeat, if somebody gives you a guarantee of a return on your money or a return off your money, or a return within a certain timeline, and if it just sounds too good to be true, it probably is too good to be true. So you should allow yourself the liberty of being skeptical, coming back again to saying it's all about you. It's not about the regional center. It's not about the attorney who's representing you. So I'm a very, very firm believer in that. So those would be the immediate red flags.
Fantastic.
Just one addition to that. So since we are dealing with the risks, broadly with EB-5, there are two risks which are involved. And I don't mean to use the word risk to scare anyone, but broadly, there are two kinds of risks. One is immigration risk, and second is financial risk. So the repayment of the capital which happens is through the success of that particular project, right? And when we are thinking from a perspective of a regional center, the risk is now diversified into 3 to 4 main concepts. First is the construction risk. The job creation which we are talking about, it's not people running around on the site. It's usually based on the spending which happens into the project. So as far as the project is being constructed in a manner which is being submitted to the USCIS as part of the initial application, it means that you're also dealing with the job creation concept of it. So the first is construction risk. Second is the counterparty risk, because you are entrusting your funds with the regional center. And the regional center, more often than not, work with third-party developers. So we are also conducting and underwriting those projects, working with those developers, seeking all the information from them to understand whether this opportunity is actually going to create those full-time jobs or not, and what is the viability of that project 2 or 3 or 4 years down the line, whether that project is going to be stabilized or not. So these are the risks which, more or less, if we are able to understand while we are conducting due diligence, will help with clarifying those doubts upfront and make the process easier for the prospective investors.
Fantastic, Girish. Now, Sebastian, in terms of the build-up from what Girish has just commented, your expertise in international investment banking, alternative investments, in your opinion, what would truly define a top-quality EB-5 program? And my next question to you is going to be on rural EB-5s, but let's first tackle the characteristics of a truly top-quality, top-notch EB-5 program.
Okay, so if I may, just to take a moment, before we came in here, I had a number of conversations in the other room with people who seemed to be perhaps not aware of EB-5 at all, and frankly not aware of what the green card even is. So some of you will clearly know this, but I think it's worth just making a few quick comments on this. And by the way, I happen to be a green card holder myself. In my case, I've had the green card for over 25 years. But the green card is a permanent residency that comes with a full work right, travel right, move about right in the United States that has historically been quite easy to get. You can get a green card in a variety of ways. Today, that's no longer the case, okay? So for anyone that is interested in either sending children to study in the United States or to themselves go with the whole family, as Girish said, this is something where the principal applicant, if it's, let's say, a married adult, that spouse will benefit and any children under 21. But oftentimes, the adults will not do it. They'll simply do it for one or more of their children, right? The benefits are enormous, right? The flexibility that comes with this is enormous, but it is very challenging to get today, and I think this is not a secret in the room. The current administration has made immigration even more challenging into the United States. But the EB-5 program is actually the last great way to do this. Of course, it entails having the means. You do need to have 800,000, and as Rohit said, 800,000 where you can prove its clean provenance. But if that's something you have, this is actually a wonderful program. And as has been touched on by Neity as well, there was a reform of this law a few years ago that has made the program much safer than it was. And frankly, it was a good program before. But now it has weeded out a lot of regional centers that either don't want to invest in compliance or don't have the ability to invest in proper compliance. It has shrunk significantly, and the remaining regional centers, some of my colleagues up here, I would say in general, they're all very good. The projects in general, to your question, are generally very good. Yes, quality does vary, but it's risen significantly. So I would want to put everyone at ease about EB-5. Risks exist. In fact, it has to be at risk. The law specifically stipulates that this investment has to be at risk. So to Rohit's point, you can't have anything guaranteed. But that doesn't mean that it's high risk, right? You just have to use your best judgment and do your due diligence. Now, 5 years ago, before the Reform and Integrity Act, 95% was real estate, and it was all going to one of 3 states, okay? Today, that's totally changed. Today, it's still some real estate, but there's all kinds of other interesting projects. We happen to be, our firm is the oldest in the industry by a mile. We were founded in the 1950s. We happen to only do manufacturing. We happen to only work in rural areas. But there are people building hospitals, there's people doing broadband investments, there are people doing, CMBs doing all kinds of interesting non-real estate things, or rather I would call it non-hospitality, non-individual, so it could be data centers, or it could be things like that. All kinds of interesting things happening. So now to get to the question, you want obviously a project that has obviously you need the job creation, you need a nice cushion on the job creation, so you don't want them to just create 10 jobs per investor, you want them to have 15 or 20 jobs, so you have a nice cushion. And then you need viability, right? How do you know you're going to get your money back? How viable is this project, right? This is a wonderful program compared to some of the other things out there, because you should expect to get your money back. This is not a donation. This is not a investment where you have to buy something. You should get your money back. So viability is super important. But if you can find something that's as closely fully financed already before you get invested, for example, that's a great way to kind of protect yourself. And again, focus on quality. But the most important thing, the three of us up here that do regional center work, that's important to find a good regional center partner, but finding a good attorney is even more important. So, it's the Rohits of the world that are going to be guiding you through the whole time, and that's where you want to go with the best.
Fantastic. So we have the three tenors and a lawyer here, so that makes life much easier and also boosts the investor confidence. So thank you, Sebastian, on those inputs. And earlier on, Girish, you did mention in your opening presentation about the audits and your fantastic collaboration with Harwood. So can you elaborate a bit on that and how you managed to get your own compliance, your own audits, and keep your standard in the industry?
Right, so that's one of the key aspects of the Reforms and Integrity Act. Like Sebastian discussed, that there are a lot of new compliances which have been introduced as part of the law. But one of the important aspects is to conduct audits throughout the project cycle. It's a financial product at the end of the day. You're making an investment. It's a limited partnership wherein there are multiple investors who are investing $800,000. And that money is being utilized into construction or manufacturing in order to create 10 full-time jobs, which is the minimum criterion. But at the end, it's also important to understand what's happening with that money, because when you're seeking any kind of loan, when a developer takes any kind of loan, with EB-5, the funds used needs to be utilized into a manner which is compliant with the EB-5 regulations as well. So there is not a lot of wiggle room for the developer to utilize the money in a manner which they want to utilize. So it is very important for the regional center as a core responsibility to ensure that we are keeping a check with that developer as to the funds which are being utilized by them are in a manner which is compliant with the EB-5 regulation or not. We file something called as 956F petition at the start of the project. So the project which we are discussing right now throughout the day, mostly we have filed for our 956F petition as the first step before we start making introductions regarding that project to the investors. So that petition essentially conducts the business plan, the TEA analysis, the job creation analysis, how the spending is going to happen, and based on that the funds are forwarded to that particular developer so that the construction can take place. So it is very important for the regional center to ensure that the funds which are being utilized are in a manner which we have submitted to the USCIS on day one. That is essentially going to be very important for us to provide the evidence of job creation at I-829 stage when you're filing for your permanent petition. So that's one of the compliances. Other compliances, the audits. So financial audits are absolutely necessary, and CMB as a regional center, we have been in this business since 1997, and because of the Reforms and Integrity Act, it's mandatory for each regional center to conduct periodic audits with a third-party firm. We have been conducting that since 2015 for all the partnerships dating back to early 2000s. So those third-party audits were voluntary at that point in time, but it's very necessary from a perspective of being transparent with our prospective and existing investors as to the utilization of the funds which is happening into any given target investment or a project is happening as per the projections which were done earlier or not. So that becomes very important to check as well.
Absolutely, very well said. And now over to Rishabh. Are some of your expectations in terms of pricing or policy of the EB-5, are there any imminent amendments that you foresee?
I think personally, I've spent a lot of time doing EB-5, and managing this region. And one thing that I've realized is U.S. immigration has never been static. So it's always, going to change. My advice to investors is, act when you're ready and, don't wait for perfect stability, in this immigration thing. So I don't think things will change. Of course, there will be some adjustments. What we've seen so far is, everything that was adjusted was to bring in stronger compliance, better clarity, I would say stronger governance, and it's a win-win for both us regional centers, because it kind of differentiates us out of the bad actors. And for the investors, there's much more transparency, much more certainty as to how these petitions are being processed, rather than just being uncertain about when do I get my green card. So.
Absolutely, very well said. Yes, Rohit, I was coming to you and then over to Sebastian.
Just wanted to add two things over here. A date to keep in mind, which is September 30th, 2026. That's the last date on or before which you should apply for your EB-5 petition, so that you can be protected and grandfathered under the law as it presently exists. That's definitely important. Second important date to remember is Jan 1, 2027, when the amount of the investment is likely to change, or it is going to change. It's $800,000 right now. By some accounts, it may go up to about $937,000. So those two dates are important, but the more urgent or the immediate date that must be kept in mind is September 30th, 2026, to be grandfathered and protected in your EB-5 petition.
Fantastic, Rohit. Could you kindly elaborate a bit more for the purposes of our audience on the grandfathering clause? Because perhaps some may not be totally aware of the recent legislations and why the grandfathering clause and hence these deadlines.
Okay, thank you. So when the law was passed on March 15th, 2022, it was effective until September 30th, 2027. However, they also had language in there saying that as long as you applied for your EB-5 on or before September 30th, 2026, you would be grandfathered and you would be protected, and your application would be reviewed and adjudicated in the law in effect at that point in time. So that is the reason why that date is so important, because you don't know what's going to happen after that date. We know the law is valid till September 30th, 2027. We don't know at this point whether it's going to be extended, whether it's going to be modified, or what the final fallout will be. We all certainly expect that it will be extended, because it's probably the only investment program in the US that actually brings in money, that creates jobs, that has no guarantee in terms of a return of the money. But like Sebastian said, you absolutely should invest with the expectation that you will get your money back. That's part of your due diligence. You must remember that, no question. But to make sure that your investment is protected, that your EB-5 is protected, people who you want to get the green card, get the green card, you should definitely be acting well ahead of the September 30th, 2026 deadline.
Fantastic. Let's move over to Sebastian once again. Now, obviously, the EB-5 has been a legacy program. It has resulted in very rock-solid job creation with the utilization of foreign capital being at the right place at the right time. And now, Sebastian, could you highlight something about your regional center that has a slightly different, think outside the box approach as a not-for-profit, and your high bar investment? Any certain case studies that you can elaborate for the purposes of our audience and tell us a bit more?
Yeah, so what you're getting at there is that actually our organization that was founded in the 1950s is set up as a nonprofit. So we're set up as something called an economic development corporation. So you can think of that really as an investment bank with a purpose. And so our entire reason for existence is, in our case, the rejuvenation of the southern heartland of the southeast of the United States, much of which is rural. So really for the last 70 years, we have been involved in rural projects, rural finance. We obviously don't just do EB-5, we do other similar programs as well. And almost all of that has been in manufacturing. We tend to focus on high-grade specialty manufacturing. These are typically billion-dollar-plus projects. And it's really ideal for EB-5. It tends to create more jobs per dollar. It tends to create the jobs earlier in the process. And it tends to create higher paying jobs. Now, that doesn't matter to an EB-5 investor, to be very clear. The USCIS doesn't delineate between a good job and a crappy job. You're responsible for 10 jobs and that's it. But when we're trying to get support in Congress, it doesn't matter. I will say, and frankly, all three of these regional centers have been very involved on Capitol Hill over the last few months, and to the extent that people are worried about the grandfathering and then perhaps the expiration of the program as a whole, there's lots of efforts being made. And I can say, generally, that support in Congress has probably never been at a higher point about EB-5, partly because, again, the Reform and Integrity Act did weed out players that were subpar. We haven't seen any frauds, and so that part has found, has led to confidence in Congress. But also, it's just become a much more diverse program. So it's now across, almost 24 states. And and growing. So a lot more different players in the Senate and the House like what they're seeing. It's helping their respective states. So we're very confident that the program will continue, that we'll be able to fix the grandfathering and so forth. Now, the project that Neity just mentioned is called High Bar. It happens to be a rural project. Rural does have a few benefits, one being faster processing. The other one being that you have a certain number of visas are set aside. So to add to Rohit's dates that you have to keep in mind, there is one other aspect that can be a worry depending on what country you come from. Some countries, EB-5 has been tremendously popular, India being one, China being another, Vietnam being another, where the allotted number of visas per country are getting used up. And then there's this idea that there may be a backlog and thus investors would have to wait a bit longer. Obviously, as time passes, that reality becomes more likely. So for anyone that is thinking of doing this anyway, doing it sooner is probably better. That way the backlog will not have built and you don't have to wait too long. That obviously an attorney can go into a lot more detail on that, but just keep that in mind.
Very good. You mentioned something about the 1950s, economic development, a not-for-profit angle. Anything to do with the Rockefeller Foundation?
Yes, that's a very good lead of a question. She's leading the witness. We were founded by the Rockefeller family and the Winthrop Rockefeller and so forth, but we are run by a board of trustees, not a board of directors. We are, again, a nonprofit, so we're also very close to the Walton family of Walmart. But again, we care about what's the impact, and I think the overall program benefits from projects like this because you get a lot of buy-in in Congress, and we all want to see this program continue and ideally grow because it has done great things for the U.S. economy across the region.
Absolutely, and as we discussed earlier, the investments are not just restricted to hospitality, but even to data centers. And I think today data is the hottest commodity. So the EB-5 program, in my opinion, objectively, is something that should remain rock solid for generations.
Right. So from an EB-5 perspective, if I'm looking at it from an investor's lens, what is the objective that I have? My objective is to get a green card. So whatever the asset classes, it can be a data center, it can be a logistics facility, it can be a hospitality project. What's important for an investor to look at is that project. That is where my money is going, and I'm not looking at it for any kind of profits through that investment. The returns on your investment in EB-5 more often than not is less than 1% per annum. So the objective is to get the green card and return of your capital, which is $800,000 US. So while conducting due diligence, you can talk about the sponsors, you can talk about the developers. We can look at who the sponsors of that project are. But what becomes important as an investor is to analyze the viability of that project from a financial standpoint and whether that asset class makes sense not now, but 2 to 3 years from now. Any kind of demand and supply works in a cyclical manner. It's never secular, hardly secular, right? So let's take an example, COVID. So COVID disrupted a lot of industries, a lot of asset classes, got disrupted not just at construction stage, but also at stabilization stage. Hospitality used to be in vogue, especially in EB-5, pre-2019. There are a lot of projects, good projects right now in the market as well, but while CMB is underwriting any project or any other regional center is underwriting the project, what we look at is the viability of that project 2 to 3 years from then, as to when the developer is able to complete that project, what is the possibility of that project getting sold out, occupied, stabilized, sold out, or refinanced, let's say in 2027 or 28. That is when the investor is completing the sustainment period. We haven't talked about sustainment. Probably Rohit can touch upon that as well. But that is when each investor is crossing that barrier in the US and expecting the repayment of their capital. So that project needs to make sense 2 to 3 years from now, rather than how the situation is currently.
Absolutely. So Rishabh, how would you add on to this in terms of the viability of the project? Do you see yourself giving 2 to 3 years or even longer at certain cases?
I think it boils down to, again, downside protection, right? So, you need to look at the legitimate job creation. How realistic is that? Like, there can be projects who are, marquee projects, spending a lot of money, maybe, creating a hospitality asset, but, does it match the cost of construction in that area? I think that is a better way to look at that. You also, very, very importantly look at, how these regional centers are valuing this project, right? Because as of now, it's under construction, right? The stabilization that Girish mentioned, what is the loan to value, what is the loan to cost, right? So these are some things that we look at, when we are underwriting assets. I completely agree, it's a cyclical business, right? But if you're done a fair underwriting and, you're very conservative in your approach, because like Girish said, again, you're looking for a green card, you're looking for your capital back. So I'm not one who looks at, okay, what category of this project, is into, is it hospitality or warehousing or, it can be anything, as long as, the evaluation is conservative. I'm sitting in a senior position. If the cycles change, the regional center is in a position to take over this asset, manage to stabilize it and get this money out. It can be a delay of few years. That is what I would look at, if I'm an EB-5 investor.
Fantastic. So before I move on to Rohit, Sebastian, do you agree with what Rishabh says, or you think that rural projects, given that they have the inherent nature of a fast-track clearance, are more reliable?
Well, again, I think it was Girish who said it earlier. There are two separate things happening here, right? There's your immigration path and your investment path, and while they depend on each other in certain ways, they are really separate paths. There is a scenario here where you have a very successful immigration path, you create all the jobs, you get your green card, you get to keep your green card, but the project itself is not as economically viable and perhaps you don't get all of your money back. And the converse can also be true, where you end up with a project that ends up being extremely successful financially, but for whatever reason they've created fewer jobs than they projected, and obviously therefore you do not get to keep your green card. So they are separate. Obviously you want both to work out. The rural aspect is a speed issue. First of all, I would say every project, and as Rishabh said, you have to obviously do your due diligence. Every project is a case-by-case situation. You have higher quality and lower quality in rural, you have higher quality and lower quality in urban settings. I would never kind of paint this with one brush stroke and say you're definitely going to be better off here or there. You do, as Girish was saying, want to pay attention to the fact that you are investing for a while, almost always more than 3 years, often and commonly more than 5 years. So what's going to happen during that time? Well, you're probably going to run into some economic downturn, and the question is how resilient is this particular category and this particular project? And in terms of being able to kind of get your money back. I don't think that relates to where it's located or what the sector is. It's very case by case. In terms of the immigration side, rural can be helpful if you have a scenario where you need speed. You want to get there faster. The kids want to get to the United States faster. There are scenarios where people actually have a reason to go slower, right? So in which case you actually don't want the processing to be faster. Your attorney, Rohit, might actually encourage you, actually right now you'd be better off in a so-called high unemployment project rather than a rural project, because it will slow things down a little bit and help your planning for family, etc. So this is again why you want to work with a top attorney who can kind of walk you through these different scenarios.
Absolutely, fantastic. That was very insightful, Sebastian, so thank you for that. Now over to Rohit. How do we tweak such scenarios based on what Sebastian just said? To go slow, to go fast? How would you allay investor confidence or a client's emotion with the right investment decision and a right immigration policy?
Thanks. First of all, I just want to reassert, I want to draw a difference between telling you where to put your money, which is financial advice, versus strategizing what may be helpful to your immigration path depending on your personal situations. So what Sebastian has suggested makes a lot of sense, and it's something you have to discuss with your client as to how quickly do they want the green card, how much longer do they want to wait, which one may be more beneficial, without telling them this is where you want to put your money, because that's financial advice. You could be walking into a lot of hot water at that point in time, and as a conservative person, I will definitely stay away from that. But it depends on the age of the children. Sometimes if there are children involved, it depends on where they are in their education graph as to whether they're in school, whether they're in college, how quickly does the child want to be in the United States, how important is it for one of the adult family members to accompany the child, how viable is it for that adult family member to spend time in the United States. There are a lot of nuances that many comments have raised, and it's almost impossible to cover that on any panel, but that's the reason why you're working with a regional center that's experienced, that has been in this game, so to say, for a while. You also want to be working with an immigration attorney who's been in the process. Most importantly, I think, as you decide who to invest with, who to engage as an immigration attorney, the concept of a relationship should be uppermost in your mind and not a transaction. You are going to be involved with these people for approximately 5 years plus. It's not a 1 year, 2 year, 3 year process. It's not buying real estate. It's actually a relationship that's going to sustain for quite some time. So you do need to be alert for all of that.
Very well said, Rohit. That was excellent about the relationship aspect. I think that definitely creates a better investor-friendly strategy. And my last question to each one of you is, as a takeaway, how does one develop a sound investor strategy going forward within the EB-5 2026 headline in terms of policy, projects, and pathways?
Right. So firstly, any investor who's looking forward to EB-5 needs to understand the concept, the overarching theme as to what you're trying to achieve for yourself and your family. As Rohit mentioned, in 2026, September 2026 is when the grandfathering effect goes away. Now, there are efforts being made to extend that, but as we speak today, September 30th is the deadline for the grandfathering effect to kick in, or rather end. So if someone is looking to invest, now is the right time to invest, or actually start exploring the projects, start talking to the attorneys, start with the source of funds documentation work, because it's not submitting your IT returns or your personal bank statements and the job is done. It takes a lot of documentation. It takes 1 to 2 months depending on the complexity of each of those cases and each of the documentation. And once that is over, you need to transfer the funds to the US as well. So before you make the petition, your source of funds documentation, your investment, and your subscription into that project also needs to be complete. That is when you can file your I-526 e-petition with the USCIS. So that strategy needs to be in place upfront. So it's very important to understand your personal timelines and accordingly take a call and start discussing within your family and industry experts as to what the right strategy would be for you.
Excellent. Over to Sebastian, please.
Yeah, I mean, I don't think I have a lot more to add. I've already said it. I think the number one priority is a top attorney. That's where you start. After that, you're looking for a regional center that makes you comfortable, and you can obviously evaluate a regional center in a variety of ways. How focused are they on compliance? What's their track record? And trying to understand, how they typically protect investors. I would point out, there are regional centers that are affiliated with or are the developer themselves. And then you have a different type of regional center that is simply an independent regional center where all the fiduciary obligation is to the investor and all they are doing is lending to a project. How good are they at identifying projects? How good is their due diligence ability and so forth? But I would try to allay any concerns and say to you, if you are working with one of the top regional centers that's been around, you're going to be in good hands. I wouldn't overthink it too much. We do sometimes see investors who spend a year, they've looked at 50 projects, they've looked at them twice, they come back around, there'll be someone who's talked to us, our project is already finished, and they come back to us and say, now I'm interested, and unfortunately it's a year later. You don't have to overthink it. This is not rocket science. You need to, find people that you feel comfortable with. Focus on best of breed. That, of course, means the attorney. It also means the regional center, but it also means who are the regional centers working. Are they working with the best economists and immigration attorneys on their side and so forth? Protect yourself. This is clearly not a place to make money, so don't fall prey to people saying, oh, I've got a slightly better return. And, that's not the point here. The point here is a safe passage for your family or for the family member that's doing the EB-5, and focus on that, right? It's forced savings for all intents and purposes, right?
Absolutely. The word safe passage is what struck me the most. Rishabh.
I think both Sebastian and Girish have already covered. I feel sometimes investors are in a lot of pressure, or scared to ask questions. Like Rohit mentioned, this is a lot of relationships. So don't be scared to ask us questions. If we are the right regional centers, we would not be worried about responding to those questions on an email. But please do ask questions, and never be feel forced to get into a project. Work with full disclosures. So
fantastic. And last but not the least, Rohit, our legal guru.
Thank you. First of all, I think I completely agree with everything that everybody has said on this panel, and hopefully we have left you with enough questions in your mind that you want to pursue and that you want to ask. You don't overthink it, as Sebastian said, but at the same time, you don't procrastinate to the point where you just end up frustrating your own efforts. There's no question. Like Rishabh said, ask the questions. If you don't ask the questions, nobody is going to ask them on your behalf. And nobody is giving you answers to questions you didn't ask, as long as you're okay with getting answers that you don't always like. And I think that's really, really important to remember in this process. It's a great option for getting a green card. Like I only half jokingly tell people, the only way, if you're from India or China, that you're getting a faster green card, or maybe even Vietnam, the only way you're getting a faster green card is if you're marrying an American citizen, and that better be a real marriage, because otherwise that will be the biggest mistake of your life, for sure. So.
Hi, alimony. Obviously, you've experienced something
No, you
similar.
could end up with a criminal offense and sit in jail. That's what I mean. Forget the alimony part of it. Yeah. Seems almost minor.
Right, so thank you, gentlemen, on my panel. Shall we open the floor for question and answers? Yes. Yes, all right. Yes. Thank you.
You talked about the proof or source of funds for satisfying USCAs. What kind of documentation would be required from investors in order that it doesn't become too difficult to procure all these documents? What kind of level of documentation that would be satisfactory for the USIs?
Sure. The level of difficulty of getting the documents is irrelevant in this process. You have to be able to provide documents that show you what is the source of the income. At the very least, the law requires you're going to provide 7 years of tax returns, at least 3 years of bank statements, and I'm going to say much more than that, because you need to be able to document where that money has come from. It's not enough to say that it's in the bank and it's legal. I'll give you a really simple example. There was a point in time where there was certain currencies were taken, or certain notes were taken out of the Indian market. I think this was maybe about 5 or 6 years ago. But you were allowed to make a deposit and you paid your taxes, no questions asked, and that money was legal. For EB-5 purposes, that money would be completely useless because you were not required to say where that money came from. You did not need to trace it to its source. That's just a simple example that I'm telling you. So just because it's in the bank does not mean it's usable for EB-5. I'm not questioning whether it's legal. I'm saying it's not traceable for EB-5 purposes.
But at times, in the case of non-resident Indians, tax returns, the income shown on tax returns and the income exempt from tax returns are totally different. The levels of these incomes are different, but these levels of income will be sitting in bank accounts. So if the source of these investments are through employment, etc., are proved, will that be sufficient?
Possibly, if you're in Dubai and you're asking whether that's a typical situation where there's no income tax in Dubai, that's, I think, pretty well established. So that
you don't even file tax returns here.
Totally agreed.
Yeah,
but that's
and
something.
And the level of income in India, for example, will be peanuts, right? Whereas the investment that you're making is $800,000, there'll be totally no relevance with the tax return, 7-year tax returns you've filed. Will that be a questionable item?
Well, I think you would discuss that with your attorney, because my position would be if you're funding it from your earnings in Dubai, I don't care so much about your tax returns in India except to show you're complying, but it would be your income and your investments in Dubai that are funding the EB-5 investment, and therefore you need to trace those back. So there would be other things such as your pay stubs, your bank deposits, your letters from your employer. So again, like Sebastian said, it's really important to work with somebody who understands the system and who knows what transpires, for example, in India, Dubai, anywhere else at all.
Sorry,
Thank you.
Just take this offline, please. In the interest of time. Yeah, thank you. But just one more question, if anybody can help. Oh, he raised his hand. Okay.
So, following to the just this discussion, UAE is very friendly to cryptocurrencies and all. People who have earned monies from crypto, how do you see as a profit or income? What do you think about those source of fund?
I smiled because crypto is certainly a very interesting situation to be in, because you need to be able to at least document, and there's so much of a discussion about crypto, but you need to be able to document where you got the money from to start investing in crypto. So it's not just enough to say I have crypto. So you're again starting from scratch. Where did the money come from to put into crypto, the platforms, etc., security issues? You may get into other security related issues, but it is something that is certainly not off the table for purposes of source of funds for EB-5.
Good afternoon. So, presently, what date is going on for the EB-5 approval for the priority date for the getting the conditional green card?
Well, I'm going to rephrase your question a little bit in terms of you can file all the way until September 30th, 2026, like I said. The priority date right now for India, I'm just assuming you're born in India, is current, which means there's no backlog. But again, to confuse things further, I think all of us would agree we have the concept of what's called almost an invisible retrogression or an invisible backlog. So we know there's going to be a backlog. The ability to predict what the backlog is going to be is zero. So that's purely like looking into a crystal ball. So I don't think your question should be what is the priority date, but I will say that there is a difference in the processing times if you're investing in a rural project versus if you're investing in a high unemployment or an urban project. So again, very nuanced question with complicated answers, so I'm happy to take it offline, but it is something you need to just know that there is a difference. Average time to get a conditional green card, which is the first green card you get, is going to be about 2 years, could be anywhere between 2 to 5 years. I think it's really important to remember that time is not of the essence when it comes to immigration processing. So time just flows like water. What is true today may not be true tomorrow. You have to understand that as part of the process.
Let's say the source of fund is not approved by the USCIS. So what will the next steps after that to get our amount back?
Well, one, you could appeal if you feel that they made a wrong decision. That would be a conversation between you and your attorney actually right in the beginning. And I think that's a judgment call that's made by the attorney who should be guiding you as to whether your source of funds is good or not, or looks like it's going to get approved or not. Sometimes, of course, that may be questionable. So, but if they don't get it approved, then you've got to go back to your agreement with the regional center and see what that documentation provides. Most regional centers will allow for a return of the monies within a reasonable time. What is a reasonable time is definitely not the day after you get the denial notice. So you've got to look at it because there may be practical considerations. If the money has already been invested, the regional center may not have that money sitting around to give back to you. So those, again, are nuances that you need to ask, need to discuss, and need to think it through. But first thing I would say is, if your attorney is giving you feedback that I think your source of funds is questionable, you need to go back to your own table and say, is this a risk that I want to take? That's the first basic question.
All right, that concludes our panel headline, EB-5 in 2026, Policy, Projects and Pathways. Thank you, Shweta, for your patience, and thank you, panelists. It was wonderful to have you on stage.